What is the most money you've ever made in 1 month?
I have made. Ooh, that's a good question. I think I've made up to 200,000 in a month.
Wow.
A crazy
Do you
month.
blow your money? Because you got two real estate guys could be talking to you.
No,
right now.
I invest almost all of it. Like I think I have like 5% of my like money in cash right now. It was a little
What
too
do you,
little.
What do you invest in though?
Mostly like right now I'm mostly just in like low cost index funds. Especially right now I've been buying up like just S&P 500, Vanguard, like VOO,
Even
VTI.
with the hostility, the
or large
shakiness
cap.
of the market, you're not.
I'm not worried at all. Yeah, like because I'm not buying like speculative kind of stuff. I'm literally buying like
Blue chips.
blue chip, and then mostly like I think 70% of my portfolio is like S&P 500 or like large sectors.
So you have the financial background, which helps.
Yeah.
Yeah,
And the number background. So
And I'm not worried. I'm not selling. I'm not worried because I know the market. Unless the whole American economy tanks forever, the S&P will go back up.
Right,
And
for
I
sure.
love buying it right now. It's like a fire sale. It's down like 25%.
I think it's going to go down another 20%.
Yeah.
Yeah, I hope so. Honestly,
Yeah,
so I can
think
buy more.
So you're buying in scale. You're waiting. You're doing.
Yeah, I'm not trading. I'm just
you
buying.
don't blow your wad in one shot. Put all your money. You wait, and then if it keeps going down, you keep buying.
Yeah, I've
going
been like
down.
dollar cost averaging. I do want to buy a property though, real estate, because I need to like diversify my portfolio.
So let's talk
Yeah.
about real estate.
Yeah, I'd love to.
So you've got your money. So like out of your entire portfolio, let's say the majority of it's in the stock market.
It's I'd say I have right now, and I want it to be more like 25% real estate, but right now I'm like 12% real estate, like mostly REITs though, not like physical actual property. 6 or 7%.
But via the stock market, like you're buying like a Simon Property Group or KMB Homes. or
No,
something like
have you ever heard of Fundrise?
that. No.
It's kind of like a group pool kind of thing. It's been around for a while. It's like legit, but it's this company that what it's kind of like a hedge fund, but you know you can invest smaller amounts. Like you could hypothetically put in $5,000 and it has around an 8% return. But they're buying actual property, so it's kind of like a pseudo REIT, but not like actually publicly traded.
But it's not. It's not. Your money's not guaranteed.
No, it's not guaranteed.
It's not guaranteed, and you're getting a monthly coupon.
It's just I'm getting dividends per month, and it equates to around like 8%, and I'm having it reinvested.
Got
So it's
it.
more like a long-term thing. And then I'm around 7% crypto, but only Bitcoin and Ethereum, kind of speculative. And I'm really conservative as an investor, but I still want to have I have a couple Bitcoin, like 3 or so, and like 3 or 4 Ethereum. But I don't fuck with like the shit coins.
The meme coins and all that stuff.
It's
yeah.
all speculative, but I'd rather have like my toes dipped in a little bit on Bitcoin just in case, but I wouldn't go above 10% of my portfolio.
Yeah, like everyone's saying it's gonna go to $1 million a coin or some shit like that.
Yeah, are you guys in Bitcoin?
Over my dead body.
I'm not.
Yeah.
No, we're
It's
100%
too,
real
it's too,
estate.
it's too volatile for me. I mean,
Yeah.
look, I believe in blockchain. I believe that there's going to be a digital currency. I think it's important. I just think that whenever things have 10, 20, 30% swings in a week, that's just something for fun. Like you said, 10%,
Yeah.
5%. Like
I wouldn't go higher than
yeah, the
I think
people
I'm
that are
7%.
going like, I'm taking my entire life savings and I'm putting into these shit coins because they want to get rich quick.
Yeah.
They also lost their ass quick, and all the NFT guys lost their ass really
yeah,
quick.
never bought an NFT.
But is there a point where Bitcoin could go down to that we should maybe start thinking of? I'll buy a couple.
I think
sit on some.
like I said, like I wouldn't have. I think like probably 5% is a good, just in case, like just diversifying and whatnot. But I wouldn't buy anything other than Bitcoin because like if it pays off big. If it doesn't, you lost 5%. It's like
So
whatever.
tell me what you think of this. I want to hear what Robert would think of this too. So to me, I feel like if I got like, let's say $1 million and I'm so good at what I do in real estate, and if I invested it all, I'm in so much control and almost guarantee I'm going to make money. Should I still diversify? I mean, wouldn't I want to put all my money in what I'm so good at and
I wouldn't put
paying
all
me
my
well?
eggs
Sorry,
in one
asking me or
basket.
Daniel?
I don't know.
No, tell me. Actually want to know what you think too.
I think Daniel's strategy, whether it's Bitcoin or whatever it is, you should be diversified, period. Because even though you may think you're in control of real estate, what if COVID happens again and you're investing in something and there's rent control or the government doesn't allow you to
You're gonna
evict?
still you're getting paid.
You're in
somewhere
trouble,
else.
you know, right?
Yeah.
Like, I don't think you should have all your eggs in one basket no matter what you do. So I think how he's diversifying is actually really, really smart.
I want to up my real estate percentage. I kind
So
of
let's
want to
talk
have
about
around,
real estate,
yeah.
commercial or residential.
I'd probably want to start
single-family
off.
homes.
I think I'm going to start off with. Here's my plan. I like Texas. It's landlord friendly. I mean, I
Yeah, you're
don't
from.
really-
Well, you were in DF. Whereabouts?
I was up in Dallas, so I kind of want to buy in McKinney, Texas. It's just like north of Dallas, and it's starting to pop off over
So I
there.
own properties in Plano and Louisville and around Frisco area.
Okay, how
So
is
I'll-
that as a landlord?
So what's crazy, I've sold sold all my stuff in DFW, but what was interesting was DFW had that boom, I'd say probably 7 years ago when Toyota came to town, you know, like where Highway Highway 121 is.
Yeah.
The main highway there was $6 billion in development, and the market just blew off. Like Frisco, McKinney, Plano, all those suburbs became the hottest thing. The problem is they're too hot now.
Do you think it's oversaturated?
100%. I think the problem with Texas compared to like Miami or LA, you can keep building north, west, east, south. There's no barriers. It's just land for days. Frisco used to be all farmland, and they started to keep building homes, and then tract home development, then a shopping center, tract home development, then a shopping center. And the problem is when you have that much inventory, it's kind of scary. And that's where you see, like, Phoenix was growing. I just read this article recently that Phoenix was one of the fastest growing home markets. But now there's 10,000 pre-foreclosures this last month.
Oh, really?
Yeah, it's crazy because they've built them so fast and they're just selling like hotcakes, but interest rates rise and all the people that are looking to buy homes are going to pump their brakes and they say, okay, I'm not going to do this anymore. But the developers are building a year before that, so they get stuck. And that's why you have the same 2009, 2010 cycle all over again where developers overbuilt, people aren't buying, foreclosure process, and it happens again. So
what do you think is the best spot right now?
Miami, hands down. Nothing even comes close.
Florida in general.
Yeah, Florida in general.
What about where is it called? What about like Jacksonville?
Yeah, I'd say you can't go wrong in Florida for the most part. But again, it depends on what. Are you talking about single family homes? You're talking about apartment buildings? You're talking about retail? You're talking
Like
about.
where would you buy I feel like for my first property, I might want to just get a single family home, just because it's easy to manage and I could potentially live in it. Like I would potentially buy somewhere in Miami that maybe eventually I would actually just move into.
Yeah, what I would say, if you're planning on buying your first place, which I would tell you never to buy your first place and move into it because it's a waste of your capital.
Okay.
But if you were to do it, buy a duplex or a triplex or a fourplex, because then you can make money off the other tenants.
Yep.
Who is managing do you hire a property manager?
I have a great property manager for that type of stuff. Like,
Was it 10%
multifamily.
you're paying them?
3%.
3%.
Yeah, I pay most of my outsourced PMs. It's 2 to 3% of the gross income.
What is the amount of money you'd recommend for your first one as a multifamily home?
That's a great question. I'm gonna take a step back before I answer that question. The situation is you are not a primarily real estate guy.
No.
Your business, and what's crazy is a lot of people I'm sure think your business is easy. You're going up, you're taking videos. And I saw you talking about how you're spending close to 70, 80, sometimes 100 hours a week filming, editing. And it's a serious fucking job. It's not a joke where you're just going up and just posting. It's not that simple.
Yes, people don't get that.
I
It's
got
a
you,
business.
baby. I got your back. See,
It's
I'm focused.
insane.
I'm
like,
paying attention to you. But,
Thank you.
And it's important for people to know because a lot of people think success is a quick hit. And in your case, it definitely was not. You had an idea that sparked, but you actually put your heart, blood, sweat, tears into it, and it became what it became. Now, what would scare me when it came to your first investment is if you're so focused in what you do and you kind of spread your attention span into another business, that may take away focus from what you're doing that you're amazing at, right? And you also have, I'm assuming, a great income source coming from your primary business.
Yeah.
So you may be able to afford, I don't know what your financial background, spreadsheet, all that is, but you may be in a position where you're saying, hey, look, I want to buy a deep value add apartment building or a deep value add shopping center because I don't need the income to support my life. I'm willing to take the losses on the property, fix it up, rehab it, sell it, and make an equity pop because I care about my net worth more. So I think that's the biggest difference between investors is, are you worried about income and cash flow because that's your primary business and that's the way you survive off of it? Or are you worried about equity building? For me,
more long-term for me.
Yeah, for me, it was long-term equity building. I'd rather be worth $300-400 million and be able to take loans out on properties and pay for my life than have to focus on making an income from an apartment all the time.
Hold on. What do you mean long-term equity building if you continue to flip out of deals like?
It's equity building. Say, for example, he bought an apartment for $1 million, right?
Okay.
And he said, look, I don't want the income. I don't care about the income. I want to just be able to fix it up, re-tenant it, and flip it. Say the property loses $10,000 a month. His income may be, I have no idea what it is, maybe $500,000 a year. So the 120 grand a year that he's spending, he doesn't care about because it's a tax write-off against his income. You're a California resident?
Officially, yes.
Okay, so there you go. He's paying 50-60% taxes on everything he's making, probably if you're a higher income earner.
Yeah,
You can use all those tax
Still
write-offs.
can move to Miami, you know?
You can use all those tax write-offs and then say, okay, well, I'm lowering my tax basis, but I'm building my equity. And for every dollar you build in equity, you're paying 0 in taxes.